It's estimated that about 40% of people have no life insurance at all, and most of those that do just don't have enough coverage to cover their needs. Now, when you're meeting with an independent fee-only planner, some of the key items they want to talk about are: one, do you need life insurance at all? If you do, how much do you need and for how long a period of time? And three, what type of insurance and where do you get it? Now, most people need about 10 times their salary to have adequate coverage, but that can vary a lot based on your age, your dependent's age, your income, your assets, your liabilities, a whole variety of factors. That's just a ballpark number. Now, there are a lot of good reasons why you could consider a permanent policy like a whole life or universal, but today I want to focus on term. And as the name implies, what a term does is it gives you coverage for a set period of time, maybe 10, 20, or 30 years. But what it really does is provide you maximum coverage for the least amount of cost, which is what I think most people need to do who have dependents. Now, one of the questions I get from people is, should I buy it at work? And there are three really good reasons why you should, and there are some reasons why you should not get a policy at work. Some of the reasons why you might consider it at work is it's pretty easy to get. You may not even need a health screening. Two, the payments are easy. It comes right out of your paycheck, so that premium is spread out over the course of a year. And three, really importantly, if your health is not optimal, you're below average, others at work might be subsidizing your premiums. Now, on the flip side, some reasons not to get it at work would include: one, if you lose your job or leave, you likely lose your coverage. Two, you may only be able to get about 5 times your salary. And as we talked about earlier, sometimes you need maybe 10 times or even more. Really importantly, your premiums can go up every year, or certainly every 5 years in brackets. So rather than locking in a premium for 10, 20, 30 years, you might see that premium just going up quite a bit over time. More importantly, you could also be subsidizing other people. So if your health is good, you might be paying more than you should. For that reason, I find that most people in good health should at least consider a policy outside of work. On the flip side, if your health is not good, you should really make sure that you get a policy at work where it's going to be available to you. You want to start the process early in the year before your open enrollment at work, because it can take about 3 months to get coverage, and you want to know well before that open enrollment whether you're going to qualify or not. Now, this advice is very general. It is not unique to one person, so it's really important that you talk to a planner and see what's right for your given situation. I'm Don Dempsey of Dempsey Investment Management, an independent fee-only financial planner, investment advisor. I hope you found this video helpful. If you have other topics that you'd like to see covered, please let me know.